Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 15th of the 11th to Friday the 19th of the 11th 2021. We've written up the weekly flows to get us underway, so let's make a start then. So euro dollar minus 159, so over that period, the 15th to the 19th, the euro dollar as an FX pair lost 159 points or pips. Euro yen minus 174, euro pound minus 135, pound dollar plus 31, pound yen plus 47, and the dollar yen plus 7. If you plug that into the formula, you get a negative unopposed driver in the euro at minus 468. No backdoor flows. The opposing positive flows mainly going into the pound at plus 213, into the dollar at plus 135, and the yen is the positive rock at plus 120. Activity plus or minus excuse me, 468. Now, so over the week then, the week we've just had, we've had a very weak euro, people abandoning the euro and driving positive flows into the pound, the dollar and the yen. So we'll stop it there and we'll write up the asset classes, and so don't go away. Right, we've written up the asset classes then. So the US dollar index, basically it did this break a while ago. It's now at a double top. It's really at highs basically. Gold in theory won't like a strong dollar, and it's come off a bit. It's 0.29 from the high, so it's nearly 30% off the model high. And oils did the break earlier, and it's come back. It's 0.40 off the high, 40% off the high. Wall Street S&P Tech then. Wall Street did the break. It's come back to its resistance point, the resistance break point, 0.18 from the high. So in other words, the break was roughly 18% above the resistance, and it's now back at the break point. The S&P is at did a break but it's held it. It's at a double top, and the tech has broken, and it's broken again. It's 0.05, so it's 5% above the second resistance break. So in order of strength, it's tech, S&P, Wall Street. If you look at the US 10-year and the bond, this is the price. The price of the US bond is 0.22 from the floor, so well below half marks. US yield pretty strong, whereas the bond yesterday, big pump up in price on the bond, so reducing falling yields, and you've got 0.09 from the high, so it's 9% below the modelled high. So there's a significant difference between US yields and European yields at the moment, the US being way stronger than Europe. Copper, been chopping about, it's below half marks, it's 0.45 from the floor, and US steel is at half marks. Right, so we'll stop that there and write up the data cycle, which is our version of the economic calendar. Right, we've written up the data cycle then. So China's neutral to slightly positive. The dollar's positive on both tier 1 and tier 2. Germany's negative. Europe is neutral to negative. Yen is neutral to negative. Pound is reasonably positive tier 1, more positive tier 2. CAD more positive tier 1, less positive tier 1, tier 2. AUD negative tier 1, positive tier 2, and New Zealand dollar tier 1 positive, tier 2 more positive, and the Swiss neutral. So what have we got then in terms of strength? You've got dollar strength in the data, and you've got CAD strength in the data, and you've got New Zealand strength in the data. So what's going to be knocking about? Well, next week we've got Monday the 22nd, we've got China rates decision, and New Zealand retail sales. That's on the Monday the 22nd. And then Wednesday we've got New Zealand rates decision. So the New Zealand dollar's in play next week, and we've got FOMC minutes on Wednesday, late Wednesday. So they're the sort of initial key events. So that's where we are there. Let's just try and work out what's going to happen then. So if I remind you of the flows then, so the flows this week have been very soft euro. So the euro's been weak, and it's been driving positive flows mainly into the pound, next into the dollar and the yen. Last week, as a point of reference then, what were the flows like? We had a negative driver in the euro again, but it was opposed that time. So the euro has been soft for a couple of weeks, and the dollar was strong last week, and the yen was neutral and the pound was neutral. And the week before that, we had significant pound weakness, minus 600 odd points on the pound. So that's where we are there. So we'll try and tie this all in. So you've got the dollar, the euro, the yen and the pound, the CAD, the NZD, sorry, the AUD, and the NZD, and the Swiss. Right, we've got the FOMC minutes on Wednesday, next Wednesday coming up. We've had strong data in. We've got inflation concerns rearing in the US, and we've had a big sell-off in the euro. The CAD, oil's come off, so oil's come off, and the AUD and the NZD. We've got rates decision next week and retail sales. So we've got New Zealand dollar in play there, and we've got the actual US dollar in play there as well. So that's something to bear in mind. If you look at the bund, that's had a really good strong pump up on Friday, the last trading day, in price. So yields have come right off. So they really rubbed it in. And if you look at the flows, as you say, the euro is the unopposed negative driver, and that can mean one of two things. It can either mean that's the start of a floor in the euro. In other words, the euro is going to bounce, or it's the start of a further ramp down in the euro. So it's but whatever it is, it's a significant point in terms of flows. So and we've had a significant drop off in the euro. So it's likely to be there's going to be a floor put in the euro because you've got this FOMC minutes, and you know, depending on how things go, there's likely to be a bit of a pause in dollar strength. Plus the bund is up near its previous high in terms of price. So we're getting sort of topping out feel and look to the market in terms of this whole sort of situation. So the likelihood is you're going to see where are we? So the likelihood is you're going to see sort of a bounce in the euros and the equivalent dollar situation there as we head into a Wednesday. Now, the market usually likes to rub it in, so we're likely to get further euro weakness Monday, possibly, and dollar strength, just to rub it in, people's positions in a little bit further. But then you're going to get this foot off the pedal, as we said, where the dollar steadies and probably comes off a bit, and all these negative flows out the euro are going to be diminished by people reducing their positions ahead of the uncertainty of the Fed on Wednesday. So that's what's likely to happen. Obviously, we'll know a little bit more when we see the Asian flows on Monday, but at the moment, that's the basic scenario as we see it. So I hope that was useful to you. Thanks for watching. There's no video tomorrow, it's a Sunday. Monday we're back into it with the Asian session flows for the daily briefing. So thanks for watching and goodbye.